After Liberation Day, there was, Armageddon, whatever. It was the end of the world. And as our data is updating and looking forward, it's saying, yeah, continued slowdown, maybe a little more intense, but continued slowdown. It's not, we don't see the end of the world there, right? And then if you're driven by headlines, which is kind of the name of the game right now, it seems, then all of a sudden, here we are at Happy Days are here again, right? This is a great week. The headlines shifted and everything is off to the races. Yet the slowdown continues, okay? The indicators that are very objective are unwavering here. That trajectory has not changed.
Are you looking for a recession in your economic?
No.
Okay.
No, we don't see a recession. So,
okay.
and we didn't see one earlier either.
Okay.
So that's what I mean by steady as she goes. I think what happens is the reason there's this unease, which let me just posit that there's right. some unease. Okay, the reason there's some unease is because it feels like the rules of the game are changing, right? I think we're all wondering about this.
Yep.
And if that is indeed the case, we could look at periods in the past where there have been what in the business you call a regime change. We're changing the rules of the game. Now, that means, okay, fine, tell me what the new rules are and I can figure it out. But everybody's models, everybody's way of thinking, they don't know what the rules are. So you're kind of driving down the road without a map in the fog. That's what it feels like. That's what the unease is. Tom, this is where the indicators come in because they're tracking that cyclical direction. They've gone through regime change since 1907 and tracked the directional moves through huge regime changes. And that's what's powerful at the moment.
We're wedded to claims, weekly data.
Yeah.
All the employment statistics with their noise and, the legitimate complexity of labor economics. What do you say? I mean, the labor market really hasn't cracked.
Exactly.
What do you see forward? What is the leading indicators of the American labor market?
Well, stable so far, not cracking, labor hoarding still there. There's a lot of backdraft still from the structural shifts in the labor market post-COVID. And now with a crackdown on illegal immigration or immigration, however you want to put it, that may tighten the market a bit more, the labor market a bit more. So you have the labor hoarding instinct of businesses. They're loath to fire, but they're not hiring. And that adds up to slower and slower jobs growth, which is exactly what I said when we started here, which is the economy is continuing to slow. If, this is not a forecast, but if you see firings really start mounting, then that means something is starting to shift in that labor hoarding psychology. That would be a notable event, Tom. That would be a big deal.
Yeah.
So is there a role for the Fed here to kind of, ameliorate some of these concerns?
Tough. I mean, that's, what you're really saying is read the mind of the administration or of President Trump. So I don't know how the Fed has tools to do that per se. They'll fall back on growth and on inflation and employment, right? So inflation is sticky, somewhat sticky. That's not going to give them a huge gift here. I mean, some of the tariffs are still to hit, so they got to deal with that. And as Tom was just saying, we were talking about employment. That's not falling apart.
Yep.
So they don't have an easy path here, I think, to say, oh my gosh, we have to ease. They don't have a crisis manifested in those indicators for them to do something.